The longer I am in the crypto space, the more I'm convinced. It's not the masses that make prices, it's a minority of few whales that push around prices to their liking, benefiting them in the long term, potentially also leveraging the price action with derivatives, with bets on the price. Because how else can we explain that very large cryptocurrencies have this massive price jumps, both to the upside but also to the downside, without any news whatsoever? We saw this with Monero, with the Ohm token that crashed 90%. Now we tend to see something in the opposite way for Monero. Monero is currently at $259. And out of the blue, it suddenly jumped up. It's 20% up on a weekly basis. And there is no announcement on Twitter. There is no news whatsoever. Google also can't find any news. And the only thing we get is actually something negative. So Mental Outlaw published a video that the Exodus wallet ended the support for Monero. Now those kind of things tend to happen relatively frequently with privacy coins because privacy coins live in a gray area. They tend to facilitate criminal behavior because it obscures where money is coming from. And it's very much dependent on the regulator whether or not this is accepted or not. Now, when we buy an altcoin for the long term, when we buy this over, say, just plain Bitcoin, then we need to expect more performance. Altcoins have more risk than Bitcoin. And when we take on more risk, we should get more performance. Otherwise, risk adjusted, it doesn't make sense to get into the alt. Now, since there's a lot of correlation within crypto, as in when Bitcoin goes up, many altcoins go up. When Bitcoin goes down, many altcoins go down. There's really no benefit in diversification too much within crypto. It makes sense to diversify across asset classes. So own some crypto, own some stocks, own some properties, some precious metals. But within the asset class, within crypto, the different individual assets are competing against one another. That's why I like to look at relative valuation charts. How is Monero doing relative to Bitcoin? Because if it does not long-term outperform, why hold XMR in the first place? Now here is XMR relative to Bitcoin over the long term. And initially we saw a lot of adoption, especially during the ICO boom. Monero was able to outperform Bitcoin very nicely, but since March of 2018, Monero tended to do worse than Bitcoin. So this is an underperformance of 92%. Now some people say that there's not a lot of value in charts like this because this is known data and known data should already be baked in the price. I tend to disagree. If enough people think that a price is comparatively low or comparatively high, then those common beliefs become self-fulfilling prophecies, right? If everybody thinks that an asset is cheap, then it won't get sold that much anymore and it will rather get bought and vice versa. And so that then explains how, for example, those tops over here on a parallel line perfectly connect those bottoms as well. And so for the last 7 years, Monero has been on a downtrend versus Bitcoin. This is our recent run. And while we are somewhat high, there is potentially a bit more upside. We could, in theory, outperform Bitcoin by another 50% or so, but I'm not really a fan of speculating against the general trend. Because here's how I see this. If the trend is currently negative, I think it's better to bet on falling prices. Because even if we don't get the entry perfectly, we can just wait it out, right? We can just wait until the price continues to decline. If we bet on rising prices, if we buy XMR and we hope for the price to continue to go up, and then it doesn't go up, we have to quit with losses very quickly. Time is working against us when we speculate against the general direction. So in a downtrend, we want to short the pumps. We want to bet on falling prices whenever we are high. In a bull market or when an altcoin is outperforming, we want to do the opposite, right? We want to buy the dip. Monero had been extremely cheap in November of last year, since then recovered. And I think it makes sense to open a position once we are at the extreme levels again, not when we are balanced like this. Now here's a chart that would warrant to enter an XMR short a bit earlier. We're still not at the top, but this shows the XMR dominance. Now most people are just familiar with the Bitcoin dominance. So this measures how much of the entire cryptocurrency market is currently in Bitcoin. But we can also look at this for any altcoin. And we can see that within the crypto space, since April of 2017, Monero tended to lose market share. And this is no surprise because, again, the centralized exchanges tend to rather delist risky tokens. There's a lot of regulatory risk, and the risk might not be worth it when the trading volume of XMR isn't that large. Now here's a trade that might make sense. And actually we see this kind of pattern for a lot of altcoins right now. Relative to Ethereum, XMR is already at the peak. So opening up a relative valuation short might make sense. In other words, we bet on falling prices of XMR and at the same time of rising prices of Ethereum. So we're just betting on the delta. Now, why do we very often see this top for many altcoins? It's because Ethereum is historically extremely cheap. This year is the Ethereum dominance, and this bottomed in September of 2019 and in December of 2019. And I think Ethereum will stay relevant. It might not play the same role among retail investors as it used to be, but it's probably going to stay the major onboarding for stablecoins, potentially for other real-world assets in the future, like gold. Maybe at some point we will see a token for silver as well, or a token for the S&P 500. Those kind of assets are likely going to get launched on Ethereum and not on Solana. And so this could potentially fuel Ethereum adoption as well. Ethereum is just historically cheap, and so relative valuation charts like XMR to Ethereum tend to be peaking. So doing this relative valuation play does make sense. It doesn't even matter that much where the general macro is going, if Bitcoin is going up or down, because if we long one asset and we short the other, we should have delta neutral exposure, at least if both assets have the same volatility. Now still, this price pump in Monero is confusing. It's not really clear why we went up that much. There are no news. The only explanation I have is that a few market makers, a few whales, saw potentially a chance to earn liquidation fees. Maybe some smart investors saw charts like this and started to bet on falling prices. And if enough people bet on falling prices and then the price rises quickly, like it did, then we're seeing liquidations. And that is what happened today. There's roughly 1 million of short liquidations. Most of them happened on Bybit. The spot trading volume is dominated by Qcoin. So maybe some people at Qcoin had a lot of Monero supply. The liquidations happened on Bybit, despite Binance actually having more perp trading volume. It doesn't seem like this price pump attracted even more short positions, because the open interest is still balanced. If people were skeptical of this price appreciation, we would see massively negative funding rates. This is not what we observe in the market. The open interest, or the amount of bets on the Monero price, also did not go up. So this seems to have been a one-time short liquidation event. Thus, I believe it's likely we are going to continue to go back to regular prices again. We are already dumping after this pump, and this might continue for a bit longer. Now, it appears as if everything is going up in this market, but it's not as easy. It's still, in the end, a player versus player game, and a lot of people got wrecked before this rally. The top performing crypto categories right now are Politify, but also picking up now Solana memes and AI agents, all the kind of tokens that did very well just a few months ago. Now, especially with the smaller altcoins, it's not a fair game. It's player versus player, but it's also insiders versus the public. The public doesn't know as much as the insiders, and so on average, the average retail investor does lose money. It's really a rather mixed picture. Have a look at this. This is Solana's trending tokens. There's some green, there's some red, but in the end, even during the meme coin hype in the last few months, Bitcoin dominance continued to go up. So clearly, it's not enough to just buy a representative basket of altcoins and hope for those to outperform Bitcoin. If we speculate with altcoins, we have to be somewhat active. Otherwise, we just go with BTC. BTC tends to do better than most altcoins most of the time. Now, very often the market makers and the insiders, they get away with this, right? For example, the Ohm token crashed by more than 90%, a drop of 4.5 billion. Up to this day, we still don't know who profited from this crash. The money is not gone. It's just held by somebody else. Now, what can we do in a situation like this? I think the best approach is to try to be as close as possible to the insiders. And that's the nice thing about the blockchain, right? We can see the official transactions. And if we do a bit of digging, we can find out the wallets of people that move prices. For example, over here, we've got transactions of Kyle Chessy and of other influencers that bought SPX 6900 very, very early. When we found the wallet of an insider, we can get notifications whenever those people buy and sell something. And because of that, I made a video on SPX 6900 in the early days. And that video was not that popular because most people didn't know about the token at the time. But it came out when the price was still at 10 cents. It then made this parabolic run of 1300% and of course crashed back down with the rest of the market. But I try to be early on this channel. I try to cover tokens that are bought by the insiders that still have upside potential, so feel free to subscribe over here. Now here's another example, Fartcoin. We got purchase notifications at 4 to 5 cents and subsequently there was a 4000% run, then of course our correction, but still from that signal the price is up almost 2000%. It's all a player versus player game. The insiders make most money. And the way we get all of those signals is again by finding the wallets of people that influence the prices. So again, with the example of Kyle Chessy, we've got 12 of his wallets. In total, we track more than 419 wallets. We find the wallets through various approaches, the NFTs that they hold, the current holdings that they might make public, related transaction wallets, all kinds of different approaches. There are dedicated tutorial videos on how to find influencer wallets available as well. What you're seeing over here is the paid Telegram channel. So we've got a dedicated chat just on finding new influencer wallets where we then add them to our tracking channel. So that tracking channel is also available, of course, to the premium members. And so the closer we are to the people that move prices, the more we can mimic their performances. So over here, what we see is various trades that have been made by the community. Of course, I'm not sharing the exact tokens that have been traded, but yeah, those are some examples of what is achievable with the right information. So feel free to check it out. It's currently $125 per month. The link is down below. It's thebitcoinstrader.com. You will also see a link to the premium membership now directly popping up on this video. Again, if it's your first time here, feel free to subscribe. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.